Hello, traders. Today we are talking about perhaps the most subjective and divisive subject in trading. So let me share my screen and I will tell you what that is. It is trend. Yes, I'm sorry, but it had to be done. Now, what is trend? Well, trend is when price is continually doing the same thing, whether that be in an up direction, a down direction, or a sideways direction. And what do I mean by the same thing? Well, it's moving in one direction. So here's an example of an uptrend. You can see higher highs, repeatedly higher highs, and higher lows. Okay, this is actually the dollar chart on a 3-day, I think. Here's a downtrend. This is the euro dollar also on 3 days. So lower lows, okay, or lower highs, sorry, and lower lows. Okay, now, next up, if you're having trouble identifying the trend with candles, it can be a good idea to switch it to a line chart. It can sometimes make it cleaner. Okay, so this is that same up chart, same Dixie chart, just changed to a line. Okay, and then that's the corresponding downtrend. And as you can see, the lines do make it a lot clearer, especially when you're starting out. Okay, now next up is everyone's worst scenario, and that is sideways. And this is really where most traders lose their money. Now, I'm going to explain why next, but as you can see, it's not producing any new highs and it's not really producing any new lows. Okay, so why do people lose money in this scenario? Well, this is that same downtrend on the higher time frame. Okay, so it's a 3-day chart. And what I've taken is a small snippet here. Okay, quite clearly you can see that that is right in the middle of the downtrend. Not a problem on this time frame. However, if you are looking at this in a smaller time frame, it can become less clear. To me, this looks like here the trend has changed direction. Okay, we have a downtrend here on this run here. Then we have it going sideways. Okay, it drops off, and then we have what we think is an uptrend. Okay, but bear in mind that trend on the higher time frame is decidedly down. Okay, so at some point, this is just going to run out of steam and turn over, and you need to be very, very aware of that. And that's where multiple time frame analysis comes into play. And we're going to talk about that in the next lesson. Okay, so let's have a look at the charts here. How do we identify when the trend is changing directions? Well, this is where indicators help. Now you can see here that I've put 2 moving averages in here. And really what we're looking for is a cross. Now, obviously there is a cross there. It corresponds with this area here. So price has come up, it's got to here, moving averages have crossed. We have a higher low and we have a higher high, and we're off. However, don't be fooled, because here price also crossed, because price spiked up enough to allow those moving averages to cross. So the way that we counteract that is simply by adding higher time frame moving averages. So let's put one in here. So what we're going to put in is a 100. So the higher the moving average, the longer it takes to tell you, the longer it takes to cross. However, it's more certain. So we can see here when price is coming down, the moving average is on the top side of price. Price has now crossed the moving average. These two moving averages have also crossed at this point here, and we're off. That's one way of doing it. There are many other ways, but the point is you have to find your own way of doing this. Okay. So that's all for today. I hope it's been useful, and I will catch you next time. Goodbye.